Hello. I take a continuation short here, timestamp 425, timestamp 455, 69.50. I buy the low 69.50, two ticks off of VPOC. Sell side tape slows up the moment I put the trade in. Buyers immediately slap up to 70 even, which is VPOC, meaning I take a big loss here. And the auction trades at VPOC, and then I accidentally stack the trade, trying to get out for a one tick loss after I realized I was wrong, and end up adding to the trade. Buyers aggressively rally. So the first trade of the day was the error I made yesterday, and that immediately put me in the hole. I should know when it is time to get out. It just hit me now how immediately conditional this is. I could have saved myself the trouble. If I cleared the tape first of all, and if I saw strong buying, not necessarily buying, but the pulling of the queue, given the market conditions we have, I could have taken that as aggressive buy pressure in the opposite direction combined with speed of tape slowing at my entry rather than continuation, and I could have saved myself the pain. I also want to go back to the entry. 10 trades, 69.25. I want to see the speed of tape when it comes down from 70. So tape's all right, speed of tape's all right. 69.25. It's the back ticking, and then one, two, three, 12 trades, 69.25, and then 69.50 back ticking. An auction continues. We see price uptick once. Now I'm watching the queue. The sellers begin to pull. They pull one at 69.50 on the ask. Tape is pretty weak. Well, I would say it's somebody spoofing on the tape in an effort to bait sellers, but it's not. And then the queue pulls immediately, so sellers are done providing liquidity down there. It pulls for the entire three tick width when I get short, meaning I effectively got baited into a breakout. Now I'm wondering if I went short. there. Who else went short? Do you know what I mean? And so I'm trying to see if there are any other people who went short with me. I just see 43 trade on the ask and then the Q pull. It's largely a Q driven move. We have some trade facilitated at volume point of control, right? VPOC, which is fine. And then the ask lifts. It begins to lift at 25. I mean to get out for a tick loss and I stack, so process error costed me $100. Now price hits 97.69, 75 on the ask, and it doesn't move lower. We're holding 70 even as value, and we're attacking 70.25. Buyers step in there, and then buyers hit again at 70.50 before they dry up at 70.25. Now I want to see what the Q does. 68 stacks at 70.75. But notice how it's lowering, and then they aggressively stack when the Q comes down. And also the bid ask is, and then the bid ask lowers as what I believe are buyers who pull. $17. The Q pulls there up to 71.25 timestamp 614. So that first one was a big process error loss. We're in a low volume node here, and I'm taking a normative order flow trade at 626. It's 71.75. Well, I tried to take it, but then I had to pull the order because price rallied without me. The reasoning behind a normative order flow trade is just an as she goes, a continuation trade on normal flow, not with any tremendous imbalance. If I see an auction, heavy volume auction, instead of normal flow, I'm incentivized to get out. I don't know why. It changes the conditions and empties short-term inventory, that's true, but I can't glean a directional bias from it yet. I don't know what it means. Normative flow in unidirectional areas of price, for example, breaking above 71 and being in the low volume node from 71.25 to 73, incentivizes Uh, what I'm talking about is emergent behavior scaring off the speculator by providing an even distribution of normal or normative order flow that makes him think there's no edge. And there very well may be no edge, but the edge itself is in the liquidity vacuum provided by the profile, assuming the profile is accurate, and the associated connotation of unidirectional moves and price continuing in one direction, and this is traded off of the nutritional. What's the word? This is sequential positioning off of the lack of liquidity from the auction that took place at VPOC. So short-term inventory has been emptied. I'm looking for just flow to continue, and if it doesn't continue, I want to get out. So if like the book pulls that could signal a change in structure, or if it begins to slow down, that would be bad. It can backtick, it just can't slow down, and value has to hold. Timestamp 644, I entered 72.25 for a normative trade. And I'm kind of looking for imperfect setups. Now here, 652, price moves against me, 3 ticks on aggressive flow from the sellers. An LE happens, very small liquidity event from somebody getting out or getting in short, and so market makers are most likely going to offset inventory back at a short-term price value for a profit of 2 to 3 ticks. So, and that's my reason for taking liquidity event trades, is to trade in the absence of the people who just got out. So assuming they bought, assuming these sell orders were absorbed by market makers, there's 45, 55, and 12. I expect market makers to sell up at 72.25 where value originally was in the short term, and that's what we see at 72.25. 63 trades on the bid inside prints, and price doesn't move. One might interpret this as absorption, but what really happened was somebody got out and there's an absence of liquidity. Now we have a big auction. It's 72. That changes the context, and I'm thinking of getting out because I wasn't expecting that. I was expecting a unidirectional move, and I don't want to trade coin tosses. I want to trade order flow. But then sellers pile in here at 72.50, and the order flow is normal. The Schelling point is 73, and I'm contemplating front running it at 72.75. The Schelling point is the value area low of the next large node. 55. Right, so now there's an auction there at 72.75, which is where price ended, and so I get out for 3 ticks for a win. I'm stalking a short trade. Timestamp 8:38. We're in the thicker part of the profile HVN, and I'm looking for a return back down into the low volume node. The Schelling point value area low of the bigger notch is 72.75. So sellers begin to hit lower. 72.75 is value. The ask shifts lower. Let me go back in time to see why I got in. We see a plunge upward on normative flow from buyers carrying price. And then on the inside prints, 73.50, 11 trades, 73.25, 108 trades on the bid, and sellers can't keep up. So a great indicator for this trade is not the order flow discrepancy at 73.25, which is a bad indicator because of how big it is. You don't want big. You don't want to fade big inside print discrepancies, especially in non-significant areas of the profile. If it was up here, it would make a difference. But the fact that price is at 73, and so now it's really up to the Q. It looks like the Q lightens up at 73 even on 12. 4 trades on the inside print. That one contract, one lot, means buyers are testing price. I couldn't see this this morning because it was paused out. Let me make sure I'm not muted. Okay. I need more water. First of all, buyers test price at 73 even, and then one trade 72.75 on the ask, and then 4 piles in. That means sellers are not testing on inside prints; they're actually committing order flow, which is good. For a second, let's go down here and look at the Q again. See how it goes from 21 to 10, 33, 27, 20, back to 12. Price moves lower, and the ask is at 18, which is the lowest out of the whole queue. Sellers are baiting buyers here. They want to see if it moves. Buyers hit it for one and it remains smaller. Then it thickens up as value holds. So the incremental price movements I'm talking about don't not matter. They matter to whoever's shifting the queue. They matter a tremendous amount. Let's go back. And so people think microstructure is random. Look, 20, 12, 12, 16, 1 trades, fine. 1 comes up, and then 4. We shift from 4 to 16. Somebody just weighed the 4 lot as order flow commitment. And then buyers also weigh the lot before 13 and 11 trades. Somebody pulls. I want to see if this disappears. It might be lag. Somebody pulls on the buy side. Yeah, it disappeared. It was lag. So they're pricing that in, that pressure. I get short here. Sellers are still baiting. They absorb and replenish on that 7 lot. I need more water. My mouth is dry. I'm short. 856 times 10. 72.75 off of that large buy order up at 73.50 and exhaustion into the low volume node. We see price continue lower. It stalls a bit. Flow is normal for now. I get out for a tick profit there. I get out for a tick profit there after price rallies. Speed of tape matters. And then I flip. I'm not so sure about the flip, to be honest. Let me see how fast it came down. 32, 18, 19. Okay, so it looks like, and now see buyers are baiting with 15, which is smaller on the queue. It looks like they're baiting sellers here, and then sellers are also doing the same thing. What do you want me to say? Like they're not doing the same thing in hindsight, and analyze it and see, well, here's the difference. They're doing the same thing. And so I can't tell you that that's an edge if both sides of the queue are doing it, right? You call it what it is, or else you handicap yourself in the future. 72.8 on the queue. That's a visible. And the offer's lifting. So this is strength. The offer lifting is an indication of strength, and the 8 and 12 is a hint. It's buyers are trying to get sellers to hit the queue so they can absorb them. Does anybody want it? Sort of thing. 12 pulls, 48, 3 pulls. I'm watching the sell queue now. 47, 46, still low size here. We jumped from 41 to 36. Sellers are pricing in a move up. 34 now, lowest it's gotten. Okay, we're back at the queue. Value shifting higher. from a time perspective. The queue's even lower now on sell side. Not 30 trades. You can expect the queue to pull some more. 18, 4, 11. Okay, I get out for a tick. Now look, that's such a good indicator. Oh my gosh. Watch. So they're still pulling. Value shifting higher. Flow looks relatively normal. There was big buying at 72.25. So there's an indication of inventory emptying in the short term. Okay, 76, 78, big buying still. 72, 75, 72.50, strong buying, no reason to fade it. And values holding higher. Sellers test here and they pile in again. They don't test, they actually hit it for 7, and then it sits. Where was it? Right there, 72.75, timestamp 1049. See the 72 on the ask? Right, that would normally, if there was weakness, send price lower. It's a spoof. Somebody's testing the market to see how strong it is. Probably a discretionary trader knows it's strong now because 70 traded. Then somebody pulls the lot. Oh, it's a real order. It's not fake. I swear that's a spoof. 72.19. First of all, it piles off by 22 or however, so that's another sign of weakness. Yeah, okay. So they ate the whole order. They ate the whole order, but how price reacts to that order is important. If the market's weak, a 71 lot 2 ticks higher, it matters less the more volume there is in the market. So that's why it's better in the pre-market. If the volume's if the market's weak, a 72 lot at 72.75 when price is 72.25, 72.50 on the ask should push price lower. And if you don't see it push price lower, we actually fill the order. That's an indication of strength. Now, eventually, what's going to happen here, I can't tell you if it's going to go up or down, but eventually, market makers will realize that the rational decision is to pull their orders on the ask side and to let these buyers, these aggressive buyers, hit into nothing, and price is going to jump, assuming value stays. And also, notice how 14, 69, 76, 72, 75. Notice how only 14 trades on 72.75 from the ask. So if you wanted to fade these people, right, yeah, there isn't. I can come help you. There isn't really anybody sell side to push it under. Sorry, I'm just talking. Okay, I'll be out there in a second. This, what's it called? Like sellers are going to have to pay higher prices, and part of them are going to get liquidated and push price up. But notice how there's 14 there. I was going to say there's nobody to fade, but there are people to fade. That 14 just means that sellers are exhausted, and so you can kind of do whatever you want with them. And it's not good enough for buyers to be absorbed or caught offside. There has to be a low side move from sellers, more so initiative selling that punishes the late buyer. If that makes sense. We have an LE here, liquidity event. That's why I get out, because tape jumps like that. So the odds are that market makers reprice lower, especially because there's value right there. They're going to absorb all these buys. They're going to buy off them, and then they're going to absorb these people buy, and market makers buy the inventory off them, right? Or they short, and then they cross the spread and sell down here. They close their trade in the form of a buy order, right? So they're going to offload inventory here that was provided by the buyer and get out here and pocket the price discrepancy from the liquidity vacuum they created. If they don't do that, that means value is sticking. Now what you're seeing here is heavy absorption and me trying to trade it. Eventually that's what happens and it does move lower, but price stagnates. So there is a bit of it looks like they just unload there, actually. Everybody gets liquidated and they just unload there. I have a couple trades. I have to go help my grandfather. I'll be back.